The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to start out like we usually do here at Tiger Financial News Network. We're going to look at the DAX index. I posted the hourly chart. And as you can see here, we've had an explosive move this morning. It gapped up, of course, and has had a heck of a move. It's up over 100 points in the DAX. And what we're going to do now is look at it on a little bit longer time scale. And you'll see that this is completing an ABCD up in this area, 13,400, 13,500. But, you know, we could still go a lot higher because the emotionalism in these markets is like something we haven't seen in a very, very long time. Now, I spoke with our good friend Bill Meridian of Cycles Research about coming on the show, and he said, Larry, he said, I've been so wrong, he said, about the stock market. He said, I'm really embarrassed to come on the show. And I told him, I said, well, Bill, I said, you should be. I said, only the guests that have 100%, correction come on the show. And I was joking with him, of course, but what's so ridiculous is the fact that, everybody's wrong, folks. This guy has been for 2 years, man, he's nailed some, really great trades and moves. So just because he's wrong about something, golly gee. Anyway, we'll have him on next week. He's traveling anyway, right? And so we won't able to get him on, but we will have him. He did give us a couple of charts to look at. One that looks really interesting because it's something that we're following quite a bit. And this is the one of the things that he wanted to talk about was the fact that this, October had such a bearish formation here for stocks, but you can see here October was straight up. I don't think we've ever had an October that was this big. We've made, I believe, 55 new highs in the market in 1 year, which we've never done before, plus a whole bunch of other stuff, but that's neither here nor there. So we'll keep an eye on this as we go through here. Watching some of these things that we're looking at. The other one that Bill wanted to show us was the fact that the advanced decline line, he just wanted to show that, it was pretty much the same thing that Stan Harley was showing, and that is the fact that, there are stocks that are not going along with this move. It's mainly the stocks like Apple and Facebook and some of these others. In fact, with this Facebook today, this is probably going to be a really big deal. On the earnings, who knows? It could be something like Amazon where, the thing jumps 10%. That means Facebook could jump $18, and that would take the NASDAQ, probably up another 150 points. Who knows? We really don't know that. But if we look at this advanced decline line that we got from our good friend Stan Harley, you'll notice that it's showing the same thing pretty much that Bill Meridian was showing, but in a little different format. Now, we're going to go on a trip, boys and girls. This is travel day here at TFNN. We're going to go to India. And I just want to show you what Indian stocks look like when you look at the patterns that are in here. We have quite a few students in India all over the country. This happens to be one of our students that works for one of the big banks, and he's the head technical analyst there. But you can see there's a little too many ratios on here, but if you just look at the parallel channels, you can see that 20-man line that formed, and it's just the ABCD patterns. You can see the really nice 3-drive pattern that made the top, and that's the main thing. This happens to be an oil and gas stock that is there, and we have another one that we want to take a look at, which is a chemical stock, and you're seeing the same thing. And it's really interesting because you'll notice that these markets follow these parallel channels like we've talked about for quite some time. This is an interesting one because we're right at a 135 pattern right now. You can see those little yellow dots. So we're right over a potential buy here in this. This happens to be a weekly chart, so it's going to be very strong support here, or it's going to fail. I just wanted to give you an idea that these things work on any actively traded thing in any market in the world that we look at. So wherever country you are, just look at what you're looking, and you're going to see, some of these things that look, really interesting. So we'll watch this. We're going to be strong this morning, I think. Uh-oh, I got to do something else here. Hold on, and then we'll move on here just a little bit. You're right. Mathematics is the universal language. Albert Einstein said before God was numbers, and he was a pretty smart dude. Anyway, and he also said God does not roll dice with the universe, and God does indeed geometricize. Let's go back to what we've been watching, and that's this open interest of what we see here in the NASDAQ and the S&P. The one I'm going to talk about now is the S&P from yesterday. Another update, you'll notice that the open interest dropped by 10,000. Now, that's not much when you're looking at an open interest that has 3.185 million. So that's really not very much. The thing is that the market went up and there were no new buyers. If the NASDAQ, with the big move we had in the NASDAQ, the open interest didn't change. So there were no new buyers coming in then again, too. So that's another reason why I'm so skeptical of this, this move in these futures, because it is really showing that there's a lack of participation or a lack of buying in some of these things. So it's something that we should, pay, pretty close attention to, I would think. So that's the main thing. I want to share with you one of our favorite students put up a chart here. Hold on one second, please. 1 second. I'm sorry. This is a 20-year chart on Apple, and I just wanted to give you an idea of what he's looking at here. You're going to see some really nice patterns here. There were two Mrs. Einsteins. I don't know if you guys know that or not. The first Mrs. Einstein, she got the $1 million that he got for the Nobel Prize in, I think it was it physics? I don't remember what it was, back in 1920, 30, something like that. She got the $1 million, and what she did, she bought 3 apartment buildings in Zurich, Switzerland. And that probably is one of the better investments that Einstein probably ever done. But he married someone else. I believe he married his third cousin or something like that. But I'm not sure. If you ever get a chance to watch the special on him on the public channel, it's really quite amazing, because he is a really smart dude, as he always says. Einstein, one of my favorite quotes from Einstein, they asked him once, who are the 5 smartest men that ever walked on the planet? And he said, there was Pythagoras, of course, and he said Leonardo da Vinci, he said probably Michelangelo and Galileo, and Isaac Newton, and oh yes, myself. So he had a strong opinion of himself, but like Muhammad Ali says, if you're bragging and then you can do it, it ain't bragging. So let's take a look here at one of the things we were watching yesterday. This is the New Zealand dollar. We had this really nice, thank you very much, Duffy, for putting that in there. Duffy just posted the thing for the Einstein's thing on PBS. It's really great to watch. So that's really cool. We'll take a look here at the New Zealand dollar. We'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got a caller from Philadelphia. John, are you there?
Good morning, sir. Thanks for taking the call.
My pleasure. What can I do for you, my friend?
I would like your key to success, making money and trading currencies. First and foremost, the euro, but the Chinese yuan and others. I need your help desperately.
John, it's very simple. Do you have a pencil handy?
I'm writing it down now.
Okay, you want to buy low and sell high.
Jeez.
And one other thing, you want to buy things that go up, and if they don't go up, don't buy them. That's the words of Will Rogers, and the other one was, of course, I believe Warren Buffett. But anyway, no, that was Jesse Livermore making a joke. But the currencies are okay. I mean, it's just like everything else. Sometimes you're going to be right, sometimes you're going to be wrong. You know, we're sitting right now looking at a 15-minute chart. We're sitting exactly at a 61% retracement at, at 116.10. I posted that chart in, but then I also posted in the 4-hour chart that's looking for prices to go a little lower, and I believe that they are going to go lower. And the reason for that is this last rally that we had over 3 days could not even make a 382 retracement. We couldn't get any higher than 116.60, and we're already 50 pips below that. So this market is not acting bullish. So I think we're going to go down into that 115 level. And if we looked at that weekly chart that I've talked about several times here at TFNN, I'll bring this up so you folks can take a look at it. But it's really telling you that we could easily, get down to that level. That's where the original breakout occurred, around that 114.50, 115 level. So that's what I'm waiting to see. But this last rally we had was not even a dead cat bounce.
Yeah, I just observe, sir, that the euro versus the dollar up at 121 area back. I think that was September 8th or so. And that top in the pattern 1 month before and then after looks to be a textbook head and shoulders topping pattern. And as we're now coming back and sitting at this 117, 116 level, those were the swing highs back from 2015 and 16. And I can't help but think there's a decent shot that the euro rallied 104 to 121 and now stands a chance of falling right back down to that 104 level. Am I crazy in thinking that?
Oh, no, because if you looked at the long-term weekly, which we posted several times in the newsletter over the past month, all it did was make a 382 retracement up there at 121. That's all it was. It took 6 weeks to do it. But, it took a little more than that. It took about 6 months to do it. But we got up from 104 to 121, 17 handles, and that was not much of a rally when it stopped right where it should have. There was a 1.27 expansion, and then from the long-term high that we made, that was right at a 382. I don't have the weekly chart in front of me right now, but later I could possibly bring it into the room, to show that. But that was one of the reasons that we came up with that important level of 121 in the euro, was because of that weekly chart. And then it also gave it to us on the daily and also on the 4-hour chart. So there's a lot of things telling us that we were going to have trouble up there at 121, and so far we certainly have had trouble.
Hey, thanks for sharing that. Going into the break just ahead of the New York stock market cash open, can you just share? I'd love to listen to you free associate on how you try to maintain a position in short euro if you're looking for the scenario to profit from going back down to 104. How do you personally try to handle that if that's in your mind?
Well, it was in my mind, and I mentioned yesterday I would like to be a seller up there at that 116.60 level, but we didn't get any higher than 116.50. So those 10 pips, leaves me, holding an ice cube in the middle of the desert, because I just don't have a position, and I'd like to have something to be short, but I can't sell weakness, because I'm probably hands down the worst breakout trader that probably ever existed. But the patterns I can understand, so I'll just wait for the next pattern. And believe me, we're probably going to get it, because we have the Federal Reserve meeting, the minutes the next couple of days, plus the fact that the president might come out and pick somebody new. I don't think he's going to, but that's just my opinion. I haven't talked to him this morning because he's been busy, but possibly, we could have something exciting happening with that.
Was that you who posted a picture
Yeah, well, that came
Donald
from one
Trump's
of our
profile in the golden spiral.
Yeah, that came from one of our sick friends in the den, but I really liked it. I had to post that in there because they like to make fun of everything, but it does fit the golden ratio pretty good, which I thought was rather funny.
That is. Yeah, I think to tell you the truth, I find that more than just funny. Funny indeed, but I think there's something more to that. Anyway, so thanks so much, and hopefully the euro will decline because I'm short. So we'll see.
Well, we'll take a look here at the next thing we're going to look at. Thanks for calling in, John. I really appreciate it, my friend, and have a really wonderful November.
Thanks for your time.
Okay. Alrighty. By the way, John's costume for Halloween was Jesse Livermore. Anyway, we're going to take a look here at the Dow Jones E-mini here over the past 7 trading days. You can see we had the big drop into October 25th. We had the rally up. We had the pullback to the 618 retracement. That ABCD structure measures to pretty much right where we're trading right now, 23,460. The risk on this would only be probably about 80 points, or around $400, and we could get a move like we had between October 25th, and then we had another 2-day correction on October 27th. So that's pretty much, what we're looking at. Now the Japanese yen is at a real critical level, as you know. We've been watching this for quite some time. It's still banging up against this level here. We'll put this up here so you folks can take a look at it, and then we'll be able to see it here. We're still coming up around this 114 level. Let's just take a quick look where we're trading right now. What I've done is I've been watching the New Zealand dollar. So what I've been able to do is to watch this euro. We're back up here at this 114.20 level again in the yen, and the old high was 114.20, but we came down over 100 pips. So folks, this has got enough power to get through this time if it wants to. So if we get above 114.50 level, it's going to be okay, but it's having a hard time getting through it. What's good about these are huge markets in this Japanese yen, and if we can get through, then it really means something. But right now, it is not doing that. It's just going back, testing those highs. And how many times has it done it? Just count them. I mean, just on the long-term daily chart, it's over the past year, it's tested 3 times, and on the intraday chart, looking at the hourly, it's probably tested even more than that. So that's the main thing. Now, I'm surprised no one hasn't asked about the wheat, because we were buying wheat down there at the we have a 2-cent loss in wheat right now. We have an 8-cent stop, so make sure you have a stop working in that wheat market. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to post a chart that we were looking at yesterday in the gold. It did exactly what we wanted it to, and right down to that 1270 area. The low was 1269.20. We had a really nice rally off of that to the tune of about $12. And now what we want to do is see what's happening. You'll notice here last night, you'll notice the high last night that came in at 1281.90. That was an exact 61% retracement of the high that we made back on October 20th. So this market is still in a bear market. Now, you'll notice I was thinking that there's a possibility we could make that 1.618 expansion because we had such a quick move up there, but it stopped right at the 61% retracement. 1283, you would have been up $17 from the from the low, so that would have been half of the harmonic number. But what we're doing now is we made a low of 1269 to 1282. That's roughly $13. The 61% retracement on that is a pretty much no-brainer. That's down about $8. So around this 1273 level is where you want to take a look at it. 1273 to 1270. Below 1270, I certainly wouldn't want to be looking at it, because then you'd be looking at this longer time frame that we're watching in gold, where we could break down a little bit more. Now, silver had been, leading, and, it ain't leading too much anymore. It's not rallying nearly as much as it should be if it was a leader. But that's still early in the day, but, gold must hold above that lows we made yesterday, or this is not going to look like a very, very important pattern. That's the way it would look to me. Now, we'll take a quick look here at this dollar index because it's so related to the euro and stuff. But if you'll notice the euro here, this is the dollar. Yes, you're right, Stan. Stan Harley's looking for much lower gold prices going below 1,000, but that's long term. Long term just doesn't work in my corral, because I'm really good at the shorter term stuff. This is the U.S. dollar index as of Friday. We thought it was going to have some trouble at 95. It has had a little bit of a trouble. What's amazing is that the euro's backed off, and this should mean that the U.S. dollar index would be strong, but for these last couple of days, it has not been following. I don't know if it's related to what's going on in Spain or not. All I know is that if we can get that dollar index above that 95.50 level, it's got a really good chance of rocking and rolling to the upside. So that's really, I've got a really serious computer problem today. I cannot delete charts. I don't know why. I've done something wrong, but it's neither here nor there. I'll get it fixed sometime, a little bit later. But we'll see what's going on here. Let's check what the markets are doing. Okay, we've sold off a little bit in that Dow Jones E-mini futures. I don't know if that means very much or not, but we did have that 3-drive pattern up in that area. We have the wheats trading at 418. As long as wheat can stay above that 410 level, I believe it's got a good chance. The oil and beans, soybean oil and soybeans are starting to look like, looks like they want to hold up a little bit. So that's something to take a look at. One of the ones, we did pretty good in the gold yesterday. Just looking at it here, let's just look at this gold again here, because we've only sold off about $8, which is right near the Fibonacci number. Let's just calculate it just to make sure we get it spot on right. That would mean it would come in right around 1273.50. That's down $1.50 from where we are right now. And if it gets below 1270, it's probably wrong. So you got a $3 cushion in there. Now, folks, you're trading a contract that's worth $127,400. That's equivalent of 3 S&P contracts, and you only have to put up $1,250 margin for that. So that's a heck of a risk-reward ratio with a great deal of leverage. So, leverage can, hurt you, but it can also help you. But if you're going to use it intraday, you have to do two things. One, you certainly have to use a stop at all times. And the second thing is you got to be out of it before the close. Otherwise, your margin's going to go up to 5,000. And that you don't want to have happen. So keep an eye on that. It's going to be very interesting, how this unfolds, over these next few days and hours. So it'll be some pretty exciting things here because we have this full moon coming in here in the desert. It's incredible because it's really big. Well, it's harvest moon, of course, but we have a beautiful canyon here called Sabino Canyon. It's where Geronimo used to hide from the army troops back in the 1860s. And what happened is they've turned it into a national park, and they have a moonlight ride on the full moons of October, November, and December, where you get on the tram and you go up into the canyon, and you get to watch the animals feed. You'll see deer out there, and you'll see almost certainly a mountain lion or two, some cougars and lynx, and you'll see javelinas and, a whole lot of other things. So that's it's really exciting to look at it. We're coming down now. We're almost at the 61% retracement here in the gold. That's at 1273.50. We've been to 1273.70, so keep an eye on that, and because it's going to be interesting. But remember, we get below 1270, that's not going to be something that you're going to be too excited about. That's the way I look at it. Whether that's going to be the right way or not, we have to wait and see. But let's keep it in mind as we look at this thing. Okay. Anyway, all right. The wheat is screaming, folks. It just jumped a penny to 419 and a half, but that's still a little early in the day. We will have Norm Winsky on Friday. He'll talk to us about the lunar things, of course, but that's really what we have to wait for. I'll let him do that. He knows more about that stuff, of course, than I do. Regarding the price of the longer term price of gold, someone's asked a question. I want to bring this up here to look at it, and you want to, okay. Anyway, this is the story here on gold. We could get down to this 1250 level. This is a 4-hour chart. We only rallied, remember, to 1281.80, so it's still in a downtrend. They're asking about the Dodger game yesterday. Yeah, it was very exciting. It was raining over there. I won't even tell you how I got the tickets, because if I told you the story, you wouldn't even believe me. Well, I called two of my friends that worked with me at Drexel, and then I called Wes Parker, of course, who's one of my good buddies who still works for the Dodgers, and I told him my daughter, his daughters wanted to come to the game. Told him the whole story of watching it, and of course he got tickets from me. And the last time the Dodgers were here, that was 8 years ago, and I got 8 tickets to that game. That's when they played the Oakland Oakland Athletics in the first game. That was the greatest game I've ever seen in baseball. Even beat the one from Sunday night. But anyway, I was able to get the tickets. It didn't cost me anything. Anyway, that was neither here nor there. Okay, let's move on to something else here. They're going to go to the game tonight, too, by the way. What happened was one of our good friends at Drexel, who's been a Dodger fan forever, he's getting old now. He's got 4 tickets, and he can't go. All of his family is pretty much gone, and he doesn't even use the tickets. And I happened to call him up. He remembered me, and it was really old home week. But anyway, it was really good. Okay, let's move on to other things here, folks. It's very important on this gold that it holds this 1270, because if it doesn't, we're looking at another $25 lower. And $25 in gold is not very much, especially when the Fed is out there. That's the main thing, to really look at. Now, I want to share with you a chart that I think is really important. It comes from somebody really smart. I don't know if I've shared it or not today, but by golly, we're going to look at it again. Hold on, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I want to put the chart up of the of Apple. This goes back 20 years. It's a 20-year chart. Notice the 3 red arrows that are up there. You can see that as a 3 drive to a top pattern. You'll notice the blue lines that shows you the harmony that's there. This is a very, very important chart saying that we're probably in the area where we're going to see a very, very significant move down in Apple. Whether that's going to be the case or not, I don't know. It's just what this chart is showing, that this thing should be completing up here at 169. I believe that's it's 168, 169. I believe it's trading at 169 right now. So that's a pretty easy one, to take a look at. And hopefully I'll find this other one. Oh dear, what did I do wrong here? I wanted to talk to you about something really important regarding margin, and doggone it, I can't find the chart. Shut the front door and raise the rent. Anyway, I just wanted to go over that margin thing with you because it's really important, because it gives you really good leverage. We're right down here now at this 61% retracement here in the gold at 1273.50. The way I handled that, I just bought it, 1273.50. I know that the 78% level comes in at around 1271. So I'm only risking a couple bucks on this. If we get below 1271.50 in the gold, I'm out of there. So I'm trading a $127 contract for 200 bucks, which is not very much. So that's a key thing to keep in mind, because sometimes they work, sometimes they don't. Like the prince said in Cinderella, you got to kiss a lot of frogs. I don't know if it was Cinderella or not, but you got to kiss a lot of frogs before you find the princess. I was buying gold, Mr. Z, at 1273.50. That's the 61% retracement back. I'm assuming that is it. There's no other pattern. It's been straight down since 1281.90, which was the 61% retracement of the high 6 days ago. So it's got to hold here. If it goes below 1271.50, I am going to be out of it. So that's what I'm looking at right here. But you're trading a $127,000 contract for a couple $100. You can't get leverage better than that. That is even better than trading an option. So that's it. Now, someone we're talking about the wheat, and we made a joke about it going up, and it's trading at 420 now. Folks, the one thing you should never do is to joke about your positions. You really shouldn't. You know why? It's because your subconscious mind does not have a sense of humor. And you got to remember that. So, you shouldn't make fun of other people's positions. You shouldn't joke about your positions at any time. Mark Douglas was, oh, God, he was so adamant about that because we had met so many traders through the years, and some of them would joke about it, and Mark would sit down and give them about a 10-minute lecture of how the mind does not have a sense of humor, and what you think about, it comes about. That's why our fearless leader, Tom O'Brien, is so great to listen to, is because he's got such a great outlook on life, and the sayings that he has, are really, really terrific. So remember, what you think about is what you become. One of the best books I ever read was a very small book by James Allen, As a Man Thinketh. I really love that book. If you haven't had a chance to read it, I would certainly suggest, that you read it. Now, we got a couple other markets that are really going bananas here. I wanted to talk to you about it. You don't trade these very often, but the patterns are really cool. We'll look here first at the feeder cattle. These are the baby cows that weigh about 600 to 800 pounds. And you'll notice here that we have not quite made a new top yet, which would be a double top up there at this 161. I imagine we're going to get there today because the regular cattle market has been extremely strong. Look what happened here. We talked about this when it happened just a day or so ago when we gapped above that little parallel channel that you see in there. This is something that I put in the newsletter, that we were looking to buy cattle on a little dip there. You can see we'd like to see about a 5-cent break in cattle to buy it, and we didn't get that. And then look what happened. It gapped above it. Now, what's interesting is one of the things you want to do is when you're watching these patterns is to see what happens after that occurs. Now, look what's going to happen today on the cattle. This is going to be real interesting because now you're going to be looking at a 1.27 expansion level, plus you're going to be looking at a 1.618 expansion level up here at this 127 level. That's about a penny and a half, from where we are right now. So we'll follow through with this one tomorrow just to see what happens, because we're definitely on the move up. And when it gapped up on Tuesday, that was Monday, it was certainly telling you that we are going higher. And it certainly has done that. So the good buy, of course, was down there when it was 107. And, of course, now we're at 126. And everybody sees that cattle are going up. We owe our good friend Rich Anderson a lot of kudos for that area when around the solar eclipse around the end of August, that he was so bullish the cattle. And it's been a pretty big run here in the cattle. So we want to watch that, very, very closely. But it is moving, quite a bit. Someone's asked, do I trade a 20-year chart? Folks, at my age, you think I'm going to make another 20 years? Hello? I don't think so. I'm in the 7.5 furlongs of an 8-furlong race. So as long as I can stay healthy these next few years, I'll be a happy camper. So that's all I'm looking for. Can't expect much more than that. So we'll see. All right, let's just take a quick look at what the markets are doing. We had a little bit of a sell-off in the Dow Jones futures. They only dropped a little bit, about 50 points, which is nothing, and now they're coming back really strong. So that's what they usually do after they have the break, because the shorts are absolutely, scared to death. So watch that. Regarding the bonds, remember on the bonds, we were expecting these to get up to around the 150, almost 153, 153.80. We still haven't had much of a pullback to get back in. We've now taken out the highs of the last few days. Whether that's related to what's going on, I'm going to try to post this. Let's see if we can do that. And then we will take a quick look here. And be quiet, Marshall. Anyway, be careful what you ask for. Anyway, you'll notice here that we'd like to see this get up to about almost at 153 3/4 level, 154. You're still in a downtrend, and that would equal the rally that we have between the 6th of October and the 14th. So the 27th, you had 6 days. Guess what? On the 3rd or 4th, the number of days would be equal. So, that's what to look for. I really wanted to see a nice retracement there. As you can see, I'd like to have seen a retracement down about a handle to 151.19 in order to buy it, but that hasn't happened because it's still acting pretty strong, pretty much like what it did during the 6th to the 14th of October. So nothing really different going on at that point. So we'll watch this with a little bit. Of course, one other guest. We got another guest coming on. Somebody really famous. Bill Gary from Commodity Information Systems is going to be our guest hopefully soon. I've known Bill for, 50 years. We were both kids coming up in this business, and he is one of the premier guys for fundamentals. He has, it's called CIS, Commodity Information Systems, and we're going to try to get him on to talk to us about wheat, corn, and beans and what the outlook might be for the coming growing season. He's a really smart dude, and we'll see if we can get him on. We'll take a little break here and finish up the show. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we need to keep a close eye on the crude oil contract. We have come up to an area that we talked about in the newsletter this past week. It's very interesting here. If you'll notice that this area around $55 a barrel, that matched the old high from January of 2017. Now, we took that out by about 10 pips, and we didn't go much above that. So watch this very closely, because we were up now 4 days in a row. We're completing a smaller ABCD pattern from June. This is a weekly chart, so there's a lot of resistance up here, folks. So watch the crude oil. They're talking about it on TV as being a major breakout. Sure, that's possible, but it's also a possibility that we've reached this 78% level once again, much like we did in the Japanese yen, where it stayed there for, 3 different times before it had big sell-offs. So these things that they talk about on the TV don't always, fit what the charts are saying. So pay close attention. If we close above the $55 a barrel level, that would certainly mean something. That would mean that there's, some enough buying to get it moving in here. So keep an eye on it. If you bought the gold down there at, $1273.50, I wouldn't risk more than $2 on it. If it gets to $1271.50, I'd just say sayonara. If it works and it starts to move up $3 or $4, you could move your stop to break even, right a tick below the low of the day. And the gold's big enough that it can handle any kind of volume like that. And believe me, they don't go looking for stops. So if you get hit, it's either one thing, your stop is either too close or you didn't put it in. So that's the key thing, to pay attention to. So that's the main thing that we want to be watching. Oh my gosh, the show's almost coming to an end here. And we'll see what's going on here with the rest of these markets. And what are we looking at? We got the wheat at 421. And we'll have a wonderful day. Live every day in an attitude of gratitude, and may God bless.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.